The number one biggest money saver would be Toronto homebuyers Overlook as of late. I've seen so much of this renting versus buying debate as of late because interest rates are high. But the biggest factor that ultimately moves the needle for most first-time homebuyers contemplating, if I should be renting instead of buying, is the fact that when you sell your home, your primary residence, it's exempt from capital gains, meaning you pay zero tax on any appreciation on it. Yeah, zero taxes when selling. It's a pretty big thing that a lot of people seem to not be thinking of because it's very far down the road. And let's be real, nobody likes paying taxes to the tax man. So make sure to stay tuned as I break all of this down in number form for you. And if you are a first-time home buyer and are contemplating buying your first property and you're just juggling kind of like whether you should rent or not and mixing with your personal situation, you could book a call with me using the link that's right here. It's www.chatwithzen.com to chat about your personal situation and whether it actually makes sense to buy or rent.
Simply click on a date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then.
Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. Look, I love Canada. I wasn't born here, but I love Canada. But boy, do we pay a lot of taxes. And I personally have nothing against paying taxes, nor the amount I pay. My usual shtick is like whether I get the value for it, right? And do I get the value I pay equivalent in taxes right now? That's somewhat questionable right now at this point, but I digress. What I did want to talk about in this video today is the capital gains exemption. And it's something that seems to be lost in the conversation when people are talking about renting a home or buying a home. That is that your primary residence, when you buy, right, and you own it, and any appreciation on that property while you're living in there, when you sell it, is exempt from capital gains. So every dollar of appreciation you get is tax free. Because every conversation I'm having right now, or even hearing about on the renting versus buying debate, is very short-sighted and very narrow, that they forget that when you sell your primary residence in the future, it's tax-free on the appreciation you get. Plus, you get that leverage, which is 5-to-1. And that two things combined is super powerful, and it's made a lot of people money in the past decade. And it's one of the handful of ways that you can actually make money tax-free, right? Now, I've previously talked about how if I really boil down the numbers, like how much money you're paying in interest versus renting and wasting money, that sometimes it's better off to actually continue renting because the mortgage is very high right now on the interest side. But it only makes sense to keep renting short term, right? And I'll put the video up here to break down all the numbers if you want to have a look at it. But it doesn't factor in the biggest thing I've been talking about in this video, which is the capital gains exemption, because you do not get that from renting. And when you buy your next home, when you think you're timing the market, you lose all that time in the market to be exempt from taxes on the capital gains. So here's what the numbers look like. Let's use an entry-level condo as an example. Call it $600,000, which sounds about right if you're downtown, if you're looking for a home ownership. You can see the non-equity ownership of your monthly carrying costs in this calculator is like approximately, a little bit shy of $2,900. Now, if you're wondering why this number is a little bit lower, it's because I removed the principal component of it, meaning the equity pay down, because to show you a apples to apples equivalent of money wasted, because this stuff you don't get back, right? So, which is the same thing as renting. So that's why I put it in this manner. And yes, these numbers do get better over time because your mortgage amortizes, meaning you pay most of your interest up front, and every single month you pay less interest and more mortgage. That's just how the term works out. But for the sake of easy calculation and illustration, I just say, every single month is like this, okay? This means that every single month on your first condo in this example, you'll be paying roughly $2,800 or more equivalent in payments at the current rates right now, at 5.5. Remember, when you're buying your home, you want to marry the price and date the rate so that it can get better in the future. And I would say if you were to, rent a place that's also $600,000, you're maybe like $2,500 right now. So let's look at the initial investment you need to buy this so-called condo. which is like a little bit shy of 140,000. Now let's assume this $140,000, if we were put it in the stock market, anticipating a 10% growth based on history, we can have kind of a apples to apple comparison on the opportunity cost of the two. So here's a chart showing you how much money you'll make over a 10-year span. That dotted white line is the S&P 500. Remember, it is not leveraged. And on this little small note, because there's a difference of like $400 on the monthly carry over the 5-year term, just for like, again, apples to apples comparison, I baked it in and I let it compound in this chart. So it actually is adding that component to the S&P 500. So you can basically see that at year 5, if real estate were to perform at a 4% per year, it essentially beats out the S&P at 10% a year because leverage, right? So basically anything over a 4% appreciation, real estate is going to have much more significant gains because of that leverage that you can get with the lowest rate possible. Again, it doesn't feel low right now, but it's lower than other things like margin, right? So even if you factor in the cost to sell, call it 5% in 5 years, it still beats out the S&P 500. And historically, condos have appreciated about 6.93% in the last 26 years, and the entire market about 6.99% in the last 26 years. And here's the kicker. All of these real estate gains you would have had if it was your primary residence is tax-free. Meaning when you sell, you don't get taxed on the money you've made on the home you've lived in. It's a really big difference, especially if you're on a higher tax bracket, right? Generally, if you're buying a 600 grand place with 80% mortgage, you should be at least over 6 figures. And this is why if you're only focused on the short term, on that monthly difference of $400 right now, when rates are high, you're missing the forest for the tree. You're only seeing short term, and you're not seeing the things behind it. Real estate has always been a long-term game, and I've always said that. You don't make money fast in real estate, it makes money slow. Now, I will put the counter argument on the S&P 500 right now. You could make money on the S&P 500 in your TFSA, which is tax-free as well. Current maximum limit on your TFSA is about $95,000, as you can see here, unless you've been growing that TFSA. That's about 69% of your $140,000 initial investment to buy this $600,000 condo. Meaning you can shelter 69% of that investment using S&P 500 through the TFSA, but the other 31% is still exposed to tax if you're to sell. Unless you put an RSP, which means you ain't touching it until you're 65, unless you expose yourself to withholding taxes. You see my point, right? Meaning that the returns are even less after taxes. That's exactly what I'm trying to point out. And keep in mind, this is just an entry-level condo. When you upgrade your real estate, the initial amount that you have will very much likely be larger than the room you have in your TFSA because it requires a larger amount to contribute. Not to mention, a lot of my clients, when they buy their first home, they basically move their gains from the TFSA into real estate, and it opens up the TFSA room again. And if it's grown a lot, you have even larger room. So there's even a better opportunity cost there to, start investing on the stock market after you buy your first home. You see my point? I'm not saying like you got to go out there and buy your primary residence right now. Not at all, right? I'm just bringing up a different perspective in this ongoing debate about, buying versus renting. And it's a financial variable that a lot of people seems to miss, and everyone's too focused on the short term and the monthly amount you're paying between whether you're renting or buying. And look, I've been included in this conversation myself because people have asked me that question. That's why I've made these videos. But that few $100 a month difference in a high interest rate environment is currently right now. And if you're only focused on that, you are missing the forest for the tree. There's a lot more money at the back end if you plan to hold your real estate for 5 years, which is why real estate makes a lot of sense, because you can buy with the lowest rate in the current market and the bank lets you leverage it 5-to-1 as long as you can carry that property. Meaning if the market gains 3%, you make 15. If it gains 4%, you make 20. If it gains 7%, historically, you make 35% on your money. And I hope you see the point I'm trying to get at right now. Do not miss the forest for the tree just because we're in a slightly high interest rate environment right now. And my final point, which I know a lot of people may be thinking or maybe not thinking about, but may eventually ask because they talk to other people, is that what if the real estate market crashes because of the interest rates? What if prices go down in Toronto or the Greater Toronto area because we're almost at an all-time high for prices? My rebuttal is, isn't the S&P 500 at all-time highs right now too? I think like Bitcoin's almost at all-time high, if not past it. So I hope this provides you with a different perspective on buying versus renting equation. It's more of a long-term thinking that's a little bit more high level than just the whole monthly payment. So I don't want you to miss the real personal wealth builder being that capital gains exemption on your primary home when there are leveraged returns in the real estate. Now, after watching this video, if you are looking for some help on how to navigate this real estate market because you are contemplating the buying versus renting, and this is just the financial aspect of it. There's always the personal side and kind of like what happens in life. We have to marry the two, kind of like some art and some science, so that it actually still makes sense. And you want to talk about your personal situation, you can book a call with me. So the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.